Hello, this is Kirill from forexboat.com and welcome back to the course on Forex trading. Today a good opportunity presented itself and we will be conducting our second trade on our real live Forex account. If we look down here in the account history tab, you can see the result of our previous trade, which was a euro-dollar sell order, which closed at take profit and brought us a total of $56.19 profit. So now if we move on to the trade tab, you'll see that the current balance on the account is $556.19 of real money, which we will be using today to conduct our second real Forex order. So as you can see in the middle here, I've got the British pound dollar M15 chart open, and I've already got some markings on this chart which will help us conduct our trade today. So what I have here is first of all and most importantly is this moving average. It's a simple moving average and the period is 96. So I'm just going to double click that and you can see here that the period is 96. And the reason why I chose 96 is because there's 24 hours in a day and there's 4 M15 bars in an hour. So if we take 24 and we multiply it by 4, we'll get 96. So that means 96 of these bars, of these M15 bars, actually represent one full day. And it's always good to have these reference points. So you could use 100 and it would look pretty much similar, but 96 has an actual meaning behind it. It means that you're averaging your price at a daily kind of rolling rate, at your daily rolling average. And that's a good thing to just keep in mind, so that you use multiples for your moving averages. Next, so what we can see here is that back over here a couple of days ago, the price crossed the moving average downwards, and this is something that using the moving average in trading is something that we discussed in the previous section of the course. And just to give you a quick refresh, what we see here is that the price crossed the moving average downwards and it just kept tumbling down. Then the price crossed the moving average upwards. It was uncertain for a while, but then it shot up and went really high, and there's a significant movement. So that's exactly what we'll be expecting this time. The price has just crossed the moving average downwards, and there's a bit of movement downwards, and then now there's a bit of uncertainty, but hopefully because the price is below the moving average, it will continue tumbling down. Of course, a situation like this can occur where there's a lot of uncertainty and the price just keeps moving around the moving average, and this is a flat market. However, there are other factors on our side that kind of say that probably the price will actually move downwards, that confirm our point of view. So, and those factors are, one of the main factors is that if we zoom out and we go to, for instance, the hourly chart, you will see that the price is in a downward trend. The British pound dollar is in an overall downward trend. So I'm actually going to go to the daily chart over here. Now if I zoom in a bit, zoom back in, you can see that the British pound dollar is in a downward trend, and I've even highlighted this channel over here. So just ignore the moving average for now because it's a different moving average now on a different time frame. So on the daily time frame, you can see that the price is in a downward trend, and I've highlighted this channel that the price is currently in. And as you can see, it's bounced off the borders of the channel a couple of times, and now the price has come to the top border of the channel again, and that signals to us that probably it's going to bounce off backwards. So a very good confirmation from a higher time frame. That means that we are in a downward trend, and there is pressure from the market to push this price further down. And that's not something that you usually do. You usually use lower time frames to confirm higher time frames, but it's also good to reference these things when you're trading on lower time frames. It's always good to trade in line with the overall trend and see what else is going on the other time frames as well. So we've got some good indication that probably the price is going to go down. I have already chosen the take profit and stop loss, and the stop loss we usually set just above the channel level, and we've also got some quite strong resistance levels over here. As you can see, the price was very uncertain around this level, around 1.57300 and 1.57400. So as long as we set it above over there, we should be in the safe zone. The take profit, well, we basically kind of look at a strong level over here. This looks like a strong area, so if the price does get here, it might to around 1.56500. It might kind of slow down, so we'll set our take profit conservatively just above that area, and hopefully if the price does turn around, then it'll first hit our take profit. So that's the main bit. Also, because this isn't a very solid kind of analysis, it is in our favor. There is a high chance that the price will go down. However, it's not as strong as we had in our previous trades. So in this case, we would want to trade a bit more conservatively. So we won't risk 10% of our account. Let's say, for instance, we'll risk 5% of our account to be a bit more conservative. And the last thing that we have to do is check the volume or calculate the lots for this trade, and for that we will need the pips of the stop loss, as you remember. So currently the stop loss will be set at about 38 pips, so let's remember that when we're calculating the volume. Now, to calculate the volume, I'll bring up the slides from one of the previous tutorials that we're already familiar with. Alright, so now to calculate the volume of lots that we want to trade in this particular instance, we've got to take the risk in dollar terms, so the amount of money that we're prepared to lose on this one particular trade, and divide it by 10 times the number of pips in the stop loss. So the risk, as we discussed, will be setting at about 5% of our balance, which is 5% of $556, and that equals to $28. Let's put that into the equation. Now we've got to, the last thing we've got to input is a stop loss in pips, and that's about 38 pips. So let's input that now. And so that gives us, let's bring up the calculator, 28 divided by 10 times 38. That gives about 0.07. So let's put that in, 0.07 lots. All right. Perfect. So now we know what our volume is. We can go on ahead with our trade. Click this button up over here, new order. We're going to put in our lots right away, so it's 0.07. Stop loss, as we agreed, will be 1.57600. Take profit will be 1.56650. Comment is second order. Instant execution, it will be a sell order, so all set, everything's entered, and we click sell. Voila, our sell order has been conducted, 0.07 lots. We can close this now, and as you can see here, our order is in our terminal in the trade tab. So we're going to leave this order for a couple of days and then come back and see how it's going. Hopefully it won't take long, because this is a 15-minute time frame, and we're talking about movements of about 55 pips and 38 pips. So hopefully the market does go downward in this case, and we'll catch up again in a couple of days to analyze this trade. I look forward to seeing you then, and until next time, happy trading.